Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, publisher of the Center Square. Everyday Economics is brought to you by the Center Square. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, January 24th. And joining me, as always, Dr. Orphe Divounguy, PhD economist, my dear friend. The DOGE initiative, headed up by Elon Musk, has got certainly attracted a lot of attention. Fans of limited government, people that really care about the taxpayer, pay attention to the size of the federal deficit. I think that this is the kind of moment they've been sort of waiting for. You and I were trading emails back and forth this week, and you sent a story to me from LinkedIn from an executive professor of finance at Texas, I believe at Texas A&M University, by the name of Jill Satina. And she pulled out some very interesting data points. And in this moment, I'm just going to read right from her post at LinkedIn. The U.S. federal budget deficit is stabilized at about 7% of GDP. There's no incremental fiscal impulse. U.S. economic surprise index, deviations in actual U.S. economic indicators from consensus, flattens and turns ever so slightly negative. Globally, U.S. growth outperformance owes a lot to expansive policies in Q4, which in combo were unnecessary and upset global bond markets. But if you kind of skim through the rest of this, and we're gonna put her post in the show description. There's some interesting sort of pullouts toward the bottom in terms of the U.S. fiscal spending. That in the 2024 budget, $4.1 trillion in mandatory spending, including Social Security and Medicare, $1.8 trillion in discretionary spending, $1.6 trillion in federal income tax expenditures. And then she asked the question, what are tax expenditures? And she answers her own question, which I think is helpful. Tax expenditures are provisions in legislation that provide more favorable tax breaks on income tax. Bringing this back around, and thanks to Jill Satina for the terrific post at LinkedIn to kind of get us pushed away from shore. If you're Elon Musk, or if you're in any way involved in the DOGE initiative, the size of the budget that we have in this country, federal budget, where do you start?
Yeah, look, that's a good question. I don't know. Where would I start? I would really pay attention to the size of our spending on Social Security, Medicare, right? So those entitlements have kind of run out of control in the sense that they've gotten bigger and bigger over time, and we don't really have a real plan for fixing them, right? And so, and by the way, this is not my analysis. This is well-known stuff that a lot of economists have been talking about for a long time, right? Massive fiscal imbalance due to this particular part of this the mandatory spending I think is where the biggest, and she says it in her post, $4.1 trillion. That's where the stuff is. That's where the money is, right? 1.8 trillion in discretionary spending. Maybe that some of that can go away. Of course, there's more wiggle room with discretionary spending, but also, tax expenditures, right? Tax loopholes and and the ability to kind of pick winners and losers I think is a problem. And so, that's what, when I look at this, that's where I think the biggest cuts are probably going to come from. Now, of course, the question is whether or not we're going to get those, are they, and is expansionary fiscal policy even necessary at a point where the U.S. economy is outperforming the rest of the world by so much? right? And at a point where inflation is still about 2.8%, do we need to keep up this kind of spending, right? Or should we rein it in? I think we should probably rein it in, and that's my personal opinion, because I know that financial markets, really concerned about this issue. Interest rates are higher because of this, right? And so if we're going to, and I joke around all the time, I say, don't fight the Fed, right? The Fed has been working to bring inflation under control. It's time for for this fiscal situation to actually improve, and the federal government, for Washington D.C., to actually make the right moves in order to support bringing inflation under control, back down to the 2% target. Of course, that will help with interest rates. Today the Treasury yield is high. Mortgage rates, credit card rates, and mortgage rates are elevated, and it's actually really hurting, disproportionately hurting lower income Americans and families that are just stuck, right? Not being able to move, for those who want to buy a home in the housing market today because of high mortgage rates, right? The fiscal situation really needs to be reined in. And I like this post because it really highlights the magnitude of the challenge.
It's interesting. I mean, when the DOGE initiative was initially talked about, it was there were two sides to it. There was what amounted to be government waste, and then there was regulation or over regulation. And Vivek Ramaswamy was focused on the regulatory side of it, and he has now stepped away from the DOGE initiative, because it sounds as if DOGE is going to be very much focused on cuts. And
Yeah, yeah, and again, it cannot be, this whole issue cannot be politicized, right? It has to be, right. We have to
it will be. I mean, it will be. It shouldn't be. It will be.
it shouldn't be. That's right. It shouldn't be.
The country's financial well-being is a concern should be a concern of every citizen.
It's a concern of Wall Street, every citizen,
And we are, we're
Main
upside
Street.
down. I mean, what's the federal debt? What's the federal deficit
Right.
now measured in trillions?
Yeah, 7% of GDP. Other than COVID, the global financial crisis, and war times, we've never had deficits that high in good times, in normal times.
This can't be the normal. What we're experiencing right now in the country can't be the normal. So,
And it's gonna be either it's gonna be higher inflation or higher interest rates, right? And so we have to do something about this issue if we're going to see inflation and interest rates come back under control.
it'll be interesting to see. I mean, as as we've talked about, and I want to say, thanks to everybody out there who listens to us and watches us on YouTube. I've had a wicked bad cold this week. I probably sound simply awful. I could barely hear myself think. But this has been there's been a lot of talk. It's Trump's first week in office, in Trump 2.0. There's a lot that's been said. There's a lot to process. We probably, I mean, we started this conversation with like, how do you go about something as huge as taking on the structure of the federal, the federal budget, and I'm just go back to that old axiom or idiom. How do you eat an elephant? Like one bite at a time, right?
Yeah,
So,
yeah, yeah. But my concern, I got to tell you, my concern is that when we talk about the current administration, um, I'm not hearing anything about entitlement spending, right? I am not. I'm talking about. I'm hearing things about random programs they don't necessarily agree with, and I really think that we need to take a good look at ourselves and fix this problem without getting the politics into it. Um, and that's I think that's where a perfect case scenario would be a kind of independent assessment of where the cuts are needed, and where we can do a little trimming. That's going to be that's not going to actually hurt the U.S. economy, and is going to be beneficial for all Americans in the long run. I think that might be a better way of doing it than to just leave it to politicians to continue to figure out or try to play this game. They haven't been very good at it so far,
I'll
and so
let you. I'll let you have the last word on that, and
yeah,
I
so I'm not
appreciate.
very optimistic that
No, it
leaving
doesn't
it to
sound like it.
politicians is going to get the job done. You
Doesn't
know,
doesn't doesn't sound like it at all. Let's call it good there. For Dr. Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever great podcasts are hosted.